Hey everyone, welcome. This is Chris Pickett, Chief Commercial Officer at Flock Freight. Our first market watch of 2026, and what a couple of months it's been. We'll take a quick look back at where we landed the plane Q4 2025, what our outlook is for 2026, and what we think the primary drivers are that might move the needle one way or another. Q4 25 landed at plus 4.6% year over year versus a forecast of 5. So pretty much spot in line with expectation. We came into Q4, running at about plus 2.9% and made up an awful lot of ground in December. December DAT line haul van rates were up 15% month over month. So yes, seasonal impacts do suggest that rates are typically higher in December, and that's true. The last 2 years, that's meant plus 5%. The 15-year average before that was plus 3%. So 15% is absolutely noteworthy, and we believe it's a signal of something more than seasonal inflation. Going into 26, in line with the first inflationary leg of a new cycle, we think rates could surge up to plus 25 to 30%, year over year by the end of the year. So by Q4 of 26, we see spot line haul rates fading 20 to 30% higher, and that's even in the absence of a demand catalyst. We think we get there on supply attrition alone. If we do get a demand catalyst, that could be any number of things ranging from any version of the IEEPA tariffs getting overturned. That's up for the Supreme Court to make a ruling on. $150 billion back into the economy certainly would be a tailwind. Any version of the housing market kind of unthawing and unlocking, any version of the restocking narrative taking shape, any version of a stable to improving economy, where you see some version of a manufacturing recovery that drives truckload demand would be a compounding effect. I think if we get any version of that demand support, then I see this market easily rising to plus 30 to 40% by the end of the year. So rates are likely going higher. I think we go lower first. So Q1 month to date, quarter to date so far, index is sitting at plus 19%. Again, that's just the first 2 weeks of January versus Q1 of 2025. That will no doubt thaw out a bit and kind of fade a little bit lower. We don't think we're going back to November rates, but we think we close somewhere around getting that forecast of plus 10%, plus or minus 5. So feeling good about the forecast. And then from there on a year-over-year basis, we think it's a steady march higher. So should be an active market regardless of what the economy does. So, buckle up. The penalty cost of shipping error is only going higher. If you're not a user of shared truckload service, you might want to consider that as a lever to pull as you're navigating your freight budget going into 2026. So thank you, and we'll see you next time.